Hello, clients and friends. I hope you're staying safe and doing well. We at Bander Investments have adjusted our work, but continue to remain diligent in our efforts and are here for you. As you can also likely tell, not only have I been hit with the quarantine beard, but also with the quarantine buzz. We had a fun family night here recently, and the kids took turns shaving Dad's head. However, I wanted to share with you today a few comments based on the current climate, and the information that I will cite is as of April 14th. I understand that the situation regarding the coronavirus remains fluid, however, have some details that I would like to share. I know that we all vividly recall the financial crisis of 2008. The economy was quickly contracting. Several financial institutions required bailouts, layoffs abounded, and the stock market plunged. But we weren't grappling with the fear also tied to a health crisis. We could still attend the theater, eat at a restaurant, travel, or even attend a live sporting event. The roots of today's crisis are different, and nowadays we are in the midst of both an economic and health crisis. Activities outside the home have been greatly curtailed. It's unsettling for everyone. As we are all aware, the speed of the decline of the stock market has been swift. Since the February 19th peak, the S&P index has lost 34%, plummeting to its most recent low on March 23rd. The pace of the sell-off can be traced to the enormous amount of uncertainty tied to the shutting down of major portions of our economy. What will be the ultimate impact of this? The brightest of minds continue to debate it. Investment professionals such as myself strenuously counsel against trying to time the market. And many experts and analysts continue to debate this, but nobody has a lock on the future. There are still just too many variables that exist. I wanted to point out that your individually crafted financial plan remains as your guide. This plan is rooted in the precept that the U.S. economy and global economy do expand with time. Although we don't know what will happen this next year, the long-term historical trends have been favorable. Let's continue to keep the long-term financial goals in mind, even through times like this. Since last month's low, the S&P index has rallied 25% up through April 9th. Technically, a 20% rally from the market's bottom constitutes a new bull market, technically. As of April 9th, the S&P 500 index was a modest 16% below that peak of February 19th. This recovery has been cautiously encouraging, and three variables can be cited for it. Number one, the federal government passed the CARES Act. As many of you know, this bill includes over $2 trillion in spending, generous jobless benefits, loans, and grants to businesses, stimulus checks, and more. It offers a much more aggressive response than in 2008. And although more may be needed, it seems like a good start. Second, the Federal Reserve has aggressively responded. I know pre-crisis, many questioned whether the Fed had the necessary tools in the toolkit to do much more because interest rates were so low. But apparently they do. With much greater speed than in 2008, the Fed has launched numerous programs aimed at propping up the economy, from big business all the way to Main Street. This two-pronged approach and action by the Federal Reserve has not been executed flawlessly, but it has cautiously encouraged investors to dip their toes back into the market. While the economic outlook remains fluid, investors are trying to discern some form of economic recovery in the second half of the year. Third, signs of the virus peaking have started to come forth. An April 12th headline in Bloomberg News offered a cautiously upbeat headline, citing CDC says U.S. near its peak, 70 vaccines in the pipeline. with indications that new cases may have reached their peak and may recede, talk has surfaced over when and how to best reopen the economy and many industries that have been shut down. I've been asked by many clients about Q2 and how ugly will it be. The St. Louis Federal Reserve estimates that U.S. GDP, the largest measure of economic activity, could contract by an annualized rate of 50% in Q2. This is unprecedented. Yet forecasts vary widely. In reality, we don't know how steep the downturn will be during this April through June period. In just a 3-week period, the number of first-time claims for unemployment benefits totaled an astounding 17 million, according to the Department of Labor. For perspective, during the 18-month period from 2007 to 2009, first-time claims totaled 9.6 million. A sharp contraction in the economy in Q2 is expected, and unfortunately, layoffs are the first bitter fruits of this current economic crisis. However, the discouraging layoff numbers appeared to be brushed aside by many investors. The more familiar Dow Jones Industrial Average added 2,107 points over the 3-day period when the massive new claims numbers and data were released. It's not that bad news for Main Street is a reason for Wall Street to celebrate. Far from it. We are just in uncharted economic territory. This rally in stocks is an attempt by investors to sniff out any form of economic recovery and economic rebound from the bottom. Remember, no one rings a bell that signals the all-clear signal. Collectively, markets attempt to price in future events. Economists and market watchers expect large daily swings, both up and down, to continue, especially amidst this uncertainty. We may experience an uptick of COVID-19 cases this summer after the economy reopens, and we don't know if an effective treatment will be developed or how quickly a vaccine might come forth. And for that matter, we just don't know how quickly the recovery will be and when many people will venture back into restaurants and airplanes and into the public arenas. However, as far as some final thoughts, this havoc created by COVID-19 should not be downplayed. We are living in a world that nobody could have possibly envisioned months ago. The impact caused by the virus has disrupted life around the globe. We have friends and loved ones who are dealing with this disease. Some of us know loved ones who have even lost their lives. It's incredibly unpleasant. Yet unexpected blessings have also surfaced. People are reaching out to family and friends via text, email, some even connecting the old-fashioned way by phone and mail. Families seem to be closer than they have been in years. Activities and jobs around the country may have been suspended, but not ended. Many of those seeking unemployment may get their jobs back. And based on experience, we can be cautiously confident that we will see an economic recovery take root as the pandemic subsides. We are a resilient people. We will get through this dark night and we will be stronger for it. Please know that we here at Bander Investments remain vigilant and diligent in our efforts. Please feel free to contact us if you have any questions or if we may be of service in any way. And if you have friends or family members that also could use additional guidance, please feel free to share our contact information. Thank you.